catch us like mid-conversation. I knew it was going to happen.
I knew it was going to happen. Hello, welcome everybody to today's live stream with Hint. We have Nate Goodman from Goodman CPA here joining us. And we're going to get into some good things. It's January, it's the beginning of a new year. Lots of planning and kind of looking forward to a new year. So let's talk about some of the ways that we can, specifically with our finances, kind of prep for 2025 and dig into the details. Nate, let's start with your kind of intro. Can you tell everyone and just kind of give your background and where you're at in the world?
Sure. Yeah. I'm a non-traditional accountant. I did not go to school to be an accountant. I went to school for like student ministry and then met an accountant, fell in love with the trade, and went back to school for just a little bit to get my CPA. And then now ever since then, trying to challenge the whole norm of what accounting is. And yeah, then we started to meet a DPC. We met a DPC clinic in our town that opened up. That got us on the train of figuring out what direct primary care is. And it's been a game changer for our family. I actually see a doctor now. And I've actually had like blood tests. So that's great.
Good. We encourage this.
And now that I've gotten to know more and more DPC doctors, just fired up about what you guys are doing. So that's
great. I'm glad that you were able to kind of introduce through your family, it sounds like maybe. But yeah, I feel like once you understand DPC, once you get it, it's really hard to kind of ever go away. So yeah, you've doubled down, right? You're kind of really supporting this DPC industry and really understand what these docs and providers and practice owners need and what they're looking for. And yeah, we're grateful to kind of have you and your wisdom.
Yeah, it's fun. It's been fun to watch it grow. It's been fun to watch you guys grow, and then also watch the industry grow too, and just watch more and more doctors take the jump.
Yes, yeah, it's a scary jump, but with good planning and kind of having also community, being able to talk to others that have done it before, it makes it a little less scary, right? So let's jump into, we talked about your annual strategy plan. Let's kind of talk about, you do these with your clients. Talk us through that. What do you do in your annual strategy planning with your clients?
Yeah. So I use resources, I think, just like anybody else would. So I'm not going to say that this is, my perfect algorithm of how we do strategy planning. We use a resource from Dave Ramsey. He has stuff on annual planning. He has a whole leadership development. So I'm doing that so I can give credit where credit's due. We always start with looking back, because the past usually can help inform what happened, if things went well, what didn't go well. And we just answer the question of what's working and then what's not working. There's another terminology for it of like a conversation of stop, start, and continue. So like, what do you need to stop? What do you need to start? And what should you continue doing that's working? So we start there. And then once if you put up a big whiteboard, which is what we typically do, we have like a whiteboard or a virtual whiteboard, and we just write down a brainstorming session of all those things.
Nice.
And that gets the brain spinning to start saying, okay, these are the pinpoints of places that now I remember back in quarter one, maybe the patients had an issue with talking to us and it was really hard to get schedules or whatever it might have been. We could then put that as a key topic. Okay, let's push this down for later in the meeting, but we've at least addressed quarter one, quarter two, quarter three, and quarter four.
Yeah.
Because it can be really hard to look all the way back to quarter one unless you actually try to only think about those months.
Yeah. Okay. Another question around the kind of what's working, what's not working. Could you maybe think of some examples of some things that you've talked with clients? Like what would be examples of those types of things?
Yeah. So we have, a big one is pricing. So
yes.
they're
we'll get into
adding
that a little more.
they're adding more and more patients, but then they feel like the financials aren't working out. Like the revenue they're not hitting their targets, and they're like, I'm busier than I ever have been.
Yeah.
But I'm not able to spend the time that I thought I would be able to on business development or whatever it is, because they're back seeing patients all the time.
Yeah.
So that's one that we typically see that gets pulled out as what's not working. Staff, so staff training or staff culture is a big one that gets pointed out. So we want a more unified culture, or we want our team members bought in to what we're doing. So we see that as an issue that might not be working. Um, Software can be a big piece. They are
Sure.
testing out different softwares, whether it's your EMR, your member management. Those things get pulled out of, okay, hey, this is either working really well. There's maybe some pain points in there.
Yeah.
So those are
Yeah.
probably the big three.
Yeah, those are great examples. And I feel like with the last one, like software, that's a great one, beginning of the year, kind of just in life in general. What are all these subscriptions that I'm paying for? It's also good to do that in your business, right? Yeah, great example. Okay, so yeah, that's a great way to look back again in life, but also with your business. So from that, what are kind of your next steps? What are your takeaways from those learnings?
Yeah. So once you've evaluated the past, then it's time to start trying to put together. I didn't coin this term. It's called a desired future. So that's a Dave Ramsey term, but taking and saying by a certain date, we will do a certain thing, which will result in a certain thing.
Yeah,
So an example would be, it could be by 12/31 of 2025, we will increase our marketing spend or increase the activities we do in the community. We will work to partner with more employers, resulting in a panel count of X or
yeah,
a number of patients of X. Or it might be that we're going to invest in our team and have a team size of a certain amount. We're going to add another physician, add a medical scribe, add a medical assistant, whatever it might be.
yeah,
So we try to work to say, if we could picture 12/31, what does your ideal work day look like or work week look like? So then you can kind of nail down, okay, where would I need to invest money to make that a reality?
yeah.
But
Those
the
are great.
statement kind of like defines the year.
Yes. Yeah, kind of working backwards from the goal. I like the what does your ideal work day look like? That's a great question for these DPC docs, right? That's fantastic. I'm not just always focused on patient acquisition, but I like
Mm.
that question. The what is your ideal work day? So everyone that's listening, please ask yourself, what does your ideal work day look like?
Right.
That's great, and then work backwards from that. Yeah. So then with some of those other, just like the big three kind of topics that you mentioned, those are probably something that you want to look forward to, if pricing's not working, are we going to
Yeah.
increase prices? That's scary, right?
Yeah.
Next is, are you going to add any other services or any other staff? So yeah, kind of give us a little insight into how you think about those things with your clients.
Yeah. So that question of what does your ideal workday look like? And that is going to define a lot of what you want to do, because some doctors get into it and they want to build, a multi-site practice, have multiple physicians, have a big team. And then you have a lot of doctors that want to do it because they really want work-life balance. They want to work a 4-day work week. Um, but there's kind of exterior pressures of, maybe you don't necessarily know what you want to do, but if you defined your ideal workday, that would also define what kind of clinic you might want to build. And so if it's, hey, I want to work a 4-day work week. Hey, maybe we're not going to invest tons and tons of money into marketing and build a humongous practice, because you're not going to work a 4-day work week if you're constantly onboarding new patients.
Yes.
But you could if you have a team. So maybe it's investing in a bigger team to be able to have that work-life balance. Adding services. This is a great one to say. If we want to increase revenue without increasing patient count, then you could look at adding services to increase your revenue without having to say, hey, we're going to onboard another 20, 30, 40, 100 patients.
Yeah.
And we could instead add another service that maybe half of our patients have mentioned or been interested in, to be able to increase the revenue or increase the quality of what you're providing to them. And
Yeah, that's great. Do you have, I know that the additional services really can span quite a large range, right? But are there any examples that you've seen that have worked well? There's quite a
yeah,
few
I'm
GPCs
also
in
going
your
to say
area. Oh yeah, me too.
let it
Love
ride.
it.
Um, Additional services. So I've actually heard of quite a few ones that I really like because it's kind of like a natural marketing tool, but
Yeah.
whether you use it for that or not. But occupational, like I'm trying to remember the term, occupational
Medicine.
physicals. So if they
Yeah.
come in and a certain like a group needs physicals, and you provide those for like a set fee to the employers, or for like your local town, if you do it for the fire department, they usually have to have annual physicals. The police department, a
That's
lot of
really
those.
cool. I like that one. Yeah.
And we have like some of our direct primary care doctors, they just want to go direct to the community. So they don't want to work a lot with large employer groups. They want to work with a set of families or that might be their target. And so those are great because you have the firefighters coming in, they get to know you, they get to see the space, they get a really intentional physical, which they're probably not used to. And then they're like, oh, what is this? And so it gets you a reputation in the community. Um, and so that's a great extra service, those annual physicals.
I
Uh,
really like that idea for the firefighters. I just had that's never thought about that before. That's really great. Yeah, I mean, people obviously probably already know about like sports physicals or functional medicine or hormonal
yeah,
therapy, things like that. Yeah, I mean, the range is wide, but that's cool to kind of think about these other ones that you've seen do well.
yeah,
That's great. What about expanding? Like you mentioned, some people just go into this thinking, "Oh, I'm going to have 13 clinics and multiple locations." I mean, that's a scary thing too. But
yeah.
yeah, I guess if you're planning, you're doing your planning well, you know your goals, you can support that, right?
That's right. Yeah, and being able to just write it down, and then the goals is one thing. It's like we want to open a new location. You can set the goal. Then you have to like dive into the like, well, how much does it cost for rent and for new equipment and for a
Yeah,
doctor's salary and for the person that staffs there. So there's a lot of considerations, but the goal helps you at least start
yeah.
and then prioritize.
And you and I have talked about this before, but if who's ever listening, if you're not already thinking of things along the lines of, in order to afford, X, how many more patients do I need, right? That's kind of a different way of thinking than just dollar amount,
Yeah,
right? But it's a how many additional patients can we add to the practice before that would be covered already by the practice. So yeah,
yeah,
just another kind of way to think about it.
yeah. I like that mentality too because I don't know if most of our doctors I work with are the same way as me. I don't like to be like, I want to make this much in revenue this year.
Yeah.
But I just finished a book called The E Myth, and he talks about like what's your ideal day, what's your like where do you see yourself in 10 years, and try to answer some of those questions. And then the last question is like, how much money would you actually need to make that a reality?
Mm.
And so it just kind of puts it in check of like, you still do need money to do things, even if that's not the primary motivator.
Right. Yeah. That's good. Yeah. I think that's sometimes that makes it a little more palatable, right?
Yeah, yeah.
Yeah. Um, okay, that's great. So let's see. We've talked about kind of like setting goals, looking through the year. Okay, let's talk about now, I mean, cash flow, right? Like you mentioned, you still need money to make these things. So how do you talk through this with your clients? Looking at cash flow and forecasting that.
Yeah. The thing I like the most about DPC from like the financial back end piece is it is a recurring revenue professional service based business. So it allows you to cash flow forecast much more easily than you could in an industry where you're doing projects or your patients only come see you once a year and they only pay you when they see you or you only get insurance payments like that. That gets a lot more tricky to do the cash flow forecasting. So we just take average price per membership. We
Mhm.
take your run rate. So how many average members do you add per month? And if we're not going to change anything else, like no more advertising spend, we're not adding a service to increase, then we could assume our base scenario would be we would just continue to add at that rate. Unless you got like we have a doctor that caps. He just says we're going to hit this 800
Sure.
and we're not adding anybody else. They all go to a wait list.
Yeah.
Um, But if we don't have that, we're just going to keep growing. So we can really easily know what cash is coming in, because every single month you're receiving those subscriptions, or we can then predict like which patients pay annually to put those in the correct months. So then planning the other portion of cash, which is all of your expenses and your outflows. We use a tool called Cash Flow Tool, but you could use Excel or Google Sheets or any of those other tools. QuickBooks even now has like a cash flow tool in it. You guys have a tool in there to forecast revenue inside of Hint. So all of those tools are useful to say, here's what we've had going in every month, and then predicting and saying, if you have loan payments, write how much you pay per month in loans, write how much you're going to pay per month in salaries, pay per month in advertising expense, fixed overhead, and all of that. And then if you're planning for any outlays of medical equipment, you write that down too. And that allows you to say, which months are going to be low. If we are going to have a low month, which months are we going to try to make an investment? So you're not sitting, in August and you haven't even looked at it, but the bank account's sitting at, $10,000. You got to be payroll. And you're like, I don't know if this is going to go so well. Instead, we're like, we see it coming. We could say, let's go to the bank. Let's get a line of credit before we need it. January is a great time to do that and just be like, this is probably what's going to happen in these months. And it gives you something to measure against. Forecasting is never, in cash flow forecasting, it's never perfect. It's not a perfect science.
Sure.
But if you don't put anything down,
yes,
you don't know. Like, you don't know how well you're doing or not doing.
Yeah, exactly. Okay, so we're all going to do our best at, forecasting our cash flow. We're going to kind of plan these out with goals and things and look at the year. But then let's talk about another one of your favorite topics, which we were hinting on right before we jumped live, is tax season, right? Yeah. What about tax strategies? How do you think through this? And are there specific things for DPC practices that are helpful?
Yeah, so it depends. I think every tax accountant, that's like the number one term they use, is it depends.
Yeah, that's fine. That's okay.
But with good planning, and usually planning starts, so like if we're going to start tax planning with our clients for 2025, we're starting this year, so that way in tax season next year, we're not putting things into place for 2025. So it takes the whole year to put strategies into place to reduce the tax bill. But also, talking about cash flow forecasting with tax planning is, if you know what you're taking in every month after all your expenses, then you should be able to say, hey, we need to set aside 25 to 30% of our bottom line, depending on if you're making a lot of money, it might be 35% or what state you're in. But I need to set that aside every single month, so I don't get to tax season next year and I'm struggling to make my tax payment. So making sure you're planning, one, for the tax bill, but then finding ways to mitigate or reduce the tax bill where you're staying compliant. We don't advise clients to do really risky, out of the box things that are not within the code. But there's a lot you can do within the code. So consider S Corp. If you're not trying to build something really quickly and sell it, then S Corp strategy is a great one, because it allows you to reduce your self-employment taxes. It shouldn't be the main goal, but an S Corp allows you to, if you're currently a PLLC, I'll try to explain this as simple as possible. If you're a PLLC or just a doctor operating and you don't have an LLC or a company of any sort, you have to do that first. Get your incorporation status with your state. You then can fill out a form and tell the IRS, hey, we want to be considered an S corporation. What that does is it now separates the business from you. It has its own tax return. So DPC Clinic A filed its own tax return, and then the doctor is over here. Then that company is going to pay the doctor a salary. Yeah. And this is where we typically see the most overpayment in taxes for people that have an S corporation, is they pay themselves too much. Because if you go to Indeed or salary.com and look up primary care physician in Colorado, how much can I pay myself?
Sure.
They're going to say, oh, you need to make 200 or something, and then you're going to say, okay, well, I at least need to pay myself $200,000. So I'm not paying myself something that the IRS would scrutinize or say that I'm paying myself too little. But most of our doctors that own practices don't do doctor work all day long. They do administrative work and they do other things, secretarial. You might take out the trash, so you're also a janitor. You're answering the phones, so you're a secretary. You send emails. You write down your own medical notes, so you're a medical scribe.
Interesting. Yeah.
So you combine all those together, and you get a much lower salary. So you can reduce the amount of FICA or self-employment taxes you're paying because you're paying yourself a fair salary for the jobs you're doing. So that's the S corp. It allows you to reduce those taxes, and it's in our minds it's fairly straightforward. But it's really just electing a certain status and then paying yourself a salary versus saying everything I make is my salary.
And is there some aspect of like an owner's draw involved in that as well? That's how.
Yeah. So then we have doctors that will say, well, you can pay yourself $80,000, and they're like, well, I need more than that.
Sure. Yeah.
We're like, yes. So you can also take a distribution as an owner to make up the difference of what you need to live off of. So you're not, running short and not being able to buy groceries or whatever.
Yeah. Very interesting. That's very, very smart.
The next one is the Augusta Rule. This was created by Congress to a bunch of Congress people, from what we know, have had houses in Augusta, Georgia. Want to pay taxes on the rent that they collected during the Masters tournament. And so this rule now exists that if you have a rental property that is rented for 14 days or less, it is not considered taxable income.
There you go.
So what you could do is if you hold meetings at your house for the business and you have a separate business location, your business could pay you rent for 14 days. And you would get a deduction on the DPC tax return. And then the business owner who gets the rent from the business doesn't have to report that income. So it's not taxable income to them. So now they've got a deduction over here, and they haven't increased their tax liability on the personal side. So that's a really fun one because I basically say feels like you can take money out of your business tax-free. So why wouldn't you do it? It doesn't cost you any extra. You want to make sure you put your documentation in place.
Yeah, absolutely. These are great tips, but also much more helpful when you have guidance from a CPA who knows and is used to doing this often. So yeah, here's a question. Would you rather be, getting the benefits from the Augusta Rule or go to Augusta yourself?
I'm not a big golfer. I'm not very good. I'd rather come to Colorado and go fly fishing.
There you go. Okay. I don't know if there's a rule for that, but
yeah, I don't think we can do that. But I can still rent a house for 14 days.
That's right. You can still use the Augusta Rule. Yes. Okay, that's a very helpful trick. Yeah, that's great. Are there more? There's more?
The other two we call these workhorse strategies. It's like the main things that we do with clients is like a set of strategies, but we also have other creative methods. But another one's the home office deduction. So we do have a lot of doctors that they have their practice, but they can't do the financial part of their job at the office because maybe it's a more open concept or there's not a lot of privacy. So there's a reason for them to have a home office. So you could have an administrative home office where that's where you handle the things that you can't do at the office. So you can deduct a percentage of all of your home expenses for the percentage of your home office in coordinates with your house.
Nice.
So if your home office takes up 10% of your house and you have $20,000 in home expenses, then you could get an additional $2,000 deduction. And again, we like these because you're not spending any more money to save money on taxes.
Exactly.
Making sure you're taking advantage of the deduction.
Yes. And I'm sure, I can almost say I'm 100% sure that there has been home office meetings for every DPC owner. Yes. And, that does not leave, or that does not stop. That's kind of a thing that you think about all the time.
That's right.
So,
Yeah.
yeah, that's a great one to take advantage of.
And then you can see my kids. The next one is hiring kids. My kids are too young, unless you want to have them as baby models. That's about it. Any kid under the age of 7, there's
Okay.
been court cases on this. They can't do substantial work according to the IRS, except for baby modeling. And the going rate for a baby model, I think, is like $150 to $200 an hour.
Nice.
Um, and so you could pay your kids that are under 7 if they did some advertising work for you, or maybe they're on your website.
My
For the
kids have
photo shoot.
definitely been in all of our branding shoots.
Yeah,
Yes. They've
perfect.
absolutely been in all of those. Yes.
So then you'd have to put them on payroll and give them a W-2. But the power with that is, um, they can then put money into a Roth IRA.
Mm.
So the money you pay them on that W-2, they will pay no taxes on, because the standard deduction for a single person is like $13,000.
Mhm.
You're transferring money from business to kid. So now the DPC practice income is going down. So taxable income goes down. The kid now has earned income. They can put that into a Roth IRA. They're not paying any taxes in the year they put it in. And if they're 3 years old and you put it in every single year, they're going to have like $1 million in tax-free income by the time they retire. So it's like, why wouldn't you do it?
Yeah.
If you have a little bit extra money set aside to be able to pay them. If they're over 7, that's where you start getting into documenting what they're doing. So if they are coming and shredding documents, coming and
Mhm.
taking out the trash, sweeping the floors, administrative work. If they're a little older and they can manage your social media, then they could do social media marketing.
Yeah.
The going rate for that can be significantly higher. I don't know if
Mm.
you tried to hire a digital marketing company
Yeah.
before, but that can range from like $50 an hour to $3,000 a month.
Yeah.
So those are great ways to, one, instill the work ethic in your kid, get to work alongside of them,
Yeah.
pay them, put money in retirement, or even you can have them just start paying you rent when they live at your house, or pay for groceries or something if you need that money to live off of.
Yeah.
Just contribute back to the annual household income.
There you go. These are great tips and tricks. There's just, like you said, you're already doing these things. Many of our practices are already doing these things. So it really makes sense to kind of take advantage of these options that can really benefit you and your practice and your family.
Yeah.
Okay, I have a question for you. What is a question that every DPC doc should be asking their accountant at the beginning of a new year? What should everybody be asking?
I would ask your CPA or accountant, what is one other thing I could do this year to save money on taxes?
Nice.
Most people use an accountant for taxes. The second question would be, hey, if you have any extra money, where could I invest that money this year based on what you're seeing in the market? Because CPAs or accountants, they see, like, we'll come to tax season and we'll get to see the financial results of all the businesses that we work with.
Mm-hmm.
And a lot of times they work in your community. So they might have an insight that other people wouldn't, because they're seeing all these businesses' performances and be like, oh, we see like a lot of struggle in this area. I think that'd be a good, fun question to poke at.
That's great. So people are going to be, taking these ideas and tricks and all these things, but what if they want to talk to you? Where can we find you, Nate?
You can go to our website, which is goodmancpa.llc. Again, we're not traditional, so we don't have a .com. .llc. That's always throws people for a loop. But if you go there, you'll see all our faces of our team, and you can click down at the bottom. There's a place to fill out, get in touch, and it'll come to our info inbox, and that's monitored every day. So it's a
Awesome.
great place to get in touch.
That's great. Any last thoughts as we kind of wrap it up?
The best thing I can think is write down your goals so you have something to measure, and then find somebody else to check in with you once a quarter.
Nice.
At a minimum. If it's another doctor, if it's a friend that you really trust, and say, hey, this is what I'm trying to do this year with my clinic, and I would love to just touch base, and then put it on the calendar. Hey,
Yeah.
at this quarter, we're going to touch base on goals. Because otherwise, you'll get to this point again next year and be like, "Oh yeah, I remember I did that thing at the beginning of the year, and we
Dang
actually
it.
we didn't do anything with it."
I
So
didn't do anything. Shoot, I had a whole year.
that's human nature. So
Yeah.
write down your goals. If you don't go reconcile your bank accounts, get get things ready, and make sure you know what your financial situation is, so you can be better equipped to handle this year.
Spoken like a true accountant. Reconcile your bank accounts. Love it. Nate, thank you. Thank you for
Yes.
joining us. Thank you for kind of walking us through how you work with your clients and, the things that you've seen done work well and maybe not so well, and how you can kind of plan for that in the coming year. Thank you so much. We appreciate you. We appreciate you being a hint partner and in our partner ecosystem. And
Thanks for
we
what you
will
guys
post,
do. Thanks for having me.
yeah, we'll post the link so people can find you if they want to kind of have that conversation with you and your firm.
For sure. Yeah. We
Awesome.
offer, if anybody's interested, we're happy to, we offer like a free discovery call strategy session. And that's where we'll use these same tax strategies and more. And we can actually tell you, hey, this is how much we think you're overpaying in taxes. Um, we've now uncovered about $12.2 million in tax savings for our clients. I just got that
Wow.
number yesterday.
That's a big
Um,
number.
So we at least can help you uncover some things, and we do that at no cost. So happy to help get in touch with anybody and hopefully help make DPC as sustainable as possible so we can keep growing.
That's great. Well, it's really such a benefit too that you're already familiar with the model. You kind of understand, the general goals and direction that these practices are headed towards. So that's really helpful, in the new getting to know each other and kind of understanding each
Yeah,
other. So yeah, again, thanks for being here. We appreciate you, and we'll talk with you next time.
sounds good. Thanks, Danny.
Thank you.